Let's jump into the stocks right now, and starting with Aveng. It's a construction and engineering group with a market cap of 14 billion rand, a dividend yield of 4% and a price earnings ratio of 14. The group emerged from the Anglo-Val conglomerate and includes the Grinica LTA brand, Trident Steel and McConnell Dowell in Australia. Let's start with Aveng. As I've said, how do we go on this one? Robert, I'm going to throw it straight to you.
I think on a PE basis, they're probably near the lows that they've been for a long time. Australia is battling as well. They've got some mining projects as well in Australia, and that's under pressure as well. So generally, they've got a good business. The steel division is under a lot of pressure. There's very thin margins there, and they need really extensive amount of construction to get that steel selling through their business as well. So difficult times for them, as we said, in the construction sector, but probably a little bit better situated for an uptick than some of the others. Not so much debt on their balance sheet.
Well, isn't that a good reason? Not so much debt on their balance sheet. Isn't it a reason to buy just above 30 rand?
Yeah, I quite like the company. A personal friend of mine, Roger Jardine, is the CEO and has been there for quite a while. They've diversified the business. Well, they were diversified from the start. Trident Steel, which is the business that Rob's referring to, is quite a good mid-sized distributor of steel products. They were the old Grinica LTA brand. At some point, that business division in Anglo-Val also had the Anglo Alpha cement business, which went out to become AfriSam. But, it's got the same challenges. It's done particularly well back here. Now it's looking a little bit less rosy. The margins are under pressure. The order book looks quite good, but that's what these guys always do.
All the order books look. But the question you've got to ask there, at what margin is your business being done? You may have a robust order book, but at what margin?
Well, I think margins have been squeezed right through the construction sector. And you see that there's problems with collusion and pricing. Government's come out now to say that there's going to be a fine of 10 years if anybody's caught colluding. So there's really difficult times for the construction. They're really going to have to compete with each other. So margins are thin, order books are slightly better. But so it's difficult to see if those margins are still going to be there going forward.
Are those competition issues out of the sector now?
No, I don't think so. They're sort of moot at this point. I think the reality is that when the going is good, these guys basically look at each other and they say, look, let's make sure we don't underquote each other. When things are tough, then they all fight like mad. So I think there will probably be some kind of fire where
But when? We've seen nobody lambasted for bad behavior yet.
Yeah, but this investigation is ongoing, and I'm not quite sure whether they're going to find somebody who's going to admit to something, but I think there could be trouble there. I'm not too concerned about losing government-related work, because if you look at these companies, all of them...
They've got no government-related work at the moment anyway.
But all of them are like 40% held by the Government Employees Pension Fund or the PIC. So that's another reason why I don't think they'd want to shoot themselves.
In terms of the competition issues re-2010, do you think that, as Paul says, it's a lengthy process, but should we be clear to resolution, or is everybody going to snitch, for a better word, and basically get immunity for that?
Well, I think it's difficult. I don't think they will. I think that a lot of the time, more than collusion, they would say, well, we'll stay out of this project. Let Murray's do this project, we'll do that project. So I think it's quite difficult to say that were they fixing prices, etc. So
still sounds like collusion to me.
I don't think that there will be massive fines coming out, but I think there will be going forward a very close eye on them not to do anything like that again.
Hot or not on Aveng?
Look, for the last 3 years, its earnings have been under pressure. Much as I like the guys, I'm going with not hot, because these companies' earnings too volatile, not very reliable, not really fit for most private client portfolios.
I can anticipate a trend forming here tonight. Rob, where do you stand on Aveng? Hot or not?
At the moment. I think you've got lots of time to get into these construction stocks.
I think it's going to be difficult to get a hot out of either Rob or Paul this evening on construction.